Please welcome to the stage Abby Danzig, Senior Programming Director for Bloomberg Green and Sustainability Events.
Hello, everyone, and welcome to our special session, The Future of Responsible Investing, where we will explore trends in this booming market and how to break down barriers to entry. Having John Kerry as an opening act is a pretty fortunate position that we're in for this session, so I'm excited to get started. I would love to invite you to join me in welcoming to the stage John Goldstein, Managing Director and Head of the Sustainable Finance Group at Goldman Sachs, for a conversation with Bloomberg's Francine Lacqua.
Hi, John.
Hey, Francine.
You're the real deal.
I have the water bottle to prove it.
There you go, the water bottle with the logo. So you started a company, actually, 22 years ago. So tell me your journey. You started a company, and then you got bought by Goldman Sachs.
Yeah, I mean, it's one of those slightly surreal, potentially inmates running the asylum kind of scenarios. So got involved in this back in 2020. Was trying to take some time off in 2007 and accidentally co-founded an impact investing company called Imprint Capital. Well, what happened is I had a long-standing promise to my partner. We were going to take some time off, had sold a business. And after 3 weeks roaming around in a bathrobe, moping around the house, I was saved because the Kellogg Foundation, Google.org, and a large family office all said, can we pay you to help us figure out this whole mission investing thing? And I knew some things about it, but I brought out the person who knew a lot more about it than I did, a guy named Taylor Jordan, who at that point, this field was generally seen as, and not entirely unreasonably, as Birkenstock wearers trying to learn Excel, right? Very idealistic people trying to figure out how to take those ideals and apply them to investing. And Taylor was more of a wingtip person than a Birkenstock person, right? And after soberly walking through a process that looked suspiciously like investing with these folks, like you can do this thoughtfully and responsibly, Taylor said, why don't we just do this together? And so Imprint Capital started in 2007 and worked initially with large US foundations, family offices, very impact-oriented folks, but also very sophisticated investors, right? And over time, we noticed our clientele started changing, right? Phones started ringing. It wasn't, the Ford Foundation or the Rockefeller Foundation. It was a large global bank. It was an insurance company. So this was starting to grow 2012, 2013, 2014. And, we thought Goldman Sachs was going to become another client.
Yes, they were a client initially.
Well, no, they weren't. We thought they were going to become a client.
Yeah.
And, maybe I should be disappointed they didn't become a client, but they said, we're very consensus-driven, right? This is going well, but come do one last teach-in, don't mess up, and we'll sign your contract. So went and had a great meeting. They were asking us about greenwashing, and it was funny. I said, well, why? In green bonds. And they said, we just got pitched on a bond that was labeled a green bond for a parking garage, and it was green because it had 2 plugs for electric vehicles. Right, we're like, okay, good.
So this is back in what, 2018?
This was this was 2015.
2015.
This is 2015. And so called back a couple weeks later and said, the meeting went well, it was well received, but we have this wacky idea. What if we were to buy you? And Larry, I was in my having my morning coffee. It was one of those drop my coffee mug kind of moments. But and took a while and sort of started to think about why did we start this business in the first place? We started because we wanted to move more money impactfully. We want to do it well, because you're either executing well and you're creating proof points and crowding capital in, or failures, right? And people remember those failures, those cautionary tales for a really long time. And we want to make it accessible to more people. And we realized we were kind of kidding ourselves if we thought our little 15-person company could match what we could do on all 3 of those levers joining Goldman Sachs. And so I spent 4 years in the asset management division, watching as all this got built out and grew. And then, at the top of the house at Goldman, had a long history doing this in different parts of the firm, but sort of something felt like it was happening. So just having a series of conversations, answer 2 questions.
What was happening?
So I think people were seeing.
Actually, I want to do more good, or how did the conversation start?
I think what people started noticing, things were happening in the real economy, right? These things which weren't growing so fast were growing a lot faster. Renewable power was really picking up steam. Electric vehicles were starting to really pick up steam. People were talking about circular economy, not out of idealism, but out of practicality, margins, and security of supply. And so these themes were showing up in the real economy. And I think that's really where the conclusion landed. Like, this is not an acronym. It's not a product. It's not marketing. It's a set of thematics that are secular in the real economy around climate transition and inclusive growth. And I think once you have that clarity that these are fundamental themes in the real economy, you need to mobilize yourself around it. We said it's sort of like if you went back 15 years, got out a crystal ball, and looked at technology, right? You wouldn't say it's a company, it's a sector. You'd say this is a factor that's permeating almost every nook and cranny of the economy.
So do you feel finance is getting a bad rep because it's financing all sorts of projects, including fossil fuel?
Well, look, at the end of the day, transitioning the economy and companies is about transitioning the economy and companies, right? You sort of can't cover your eyes and hope that some parts of the economy just magically change, right? At the end of the day, this takes work, it takes capital, it takes expertise, it takes advice. And at the end of the day, opting out of that is not particularly helpful. I mean, I was working with a very large, very climate-oriented pension fund client, and I think they came to the conclusion at the end of the day, we can make our portfolio look lower carbon. There will be lower carbon in this portfolio statement, but is that going to get us less carbon in the atmosphere? Right? This paper versus real-world decarbonization. Real-world decarbonization comes from rolling up your sleeves and doing the work, right? It involves capital, it involves advice, it involves all of that, and that's across these sectors.
What would make your life easier? So regulation doesn't speak the same language. We don't have a common terminology. There's not that much data transparency. What do you need?
I'd say a couple different things. I think number one, I spent a lot of time doing what I call clearing the underbrush. Right? There's a lot of jargon, there's a lot of opinions. I like to sometimes say right now we're in the era of ESG hot takes, right? That noise sometimes distracts and it triggers all these mental models and cognitive biases. And at the end of the day, it sometimes makes, if something sounds like a foreign language, a foreign acronym where you need a glossary and a map to be a tourist somewhere else, it's very daunting and it feels removed from their day job, right? At the end of the day, these are material factors that should be in the day job of investors and executives. And the more you make it sound like that's not the case, the more you slow down real progress. And so a lot of it is, it would be great if there were less underbrush created. Yeah. But other than that, I mean, I spent a lot of time, I walked through this slide with you earlier, like, it's not about E versus S versus G. It's how does this translate economically into risk, growth, and margins, right? That's language that everyone can understand. And, all the different terms and jargon may come in and out of style, but like cash flow never goes out of fashion, right? And I think that's kind of the core idea. And so I guess back to what would make it easier, I think a little less noise. I think hopefully we're going to have an era of kind of more fire, less smoke. I think that would help. I think number two, look, and we've been very outspoken that a price on carbon would help. Right, at the end of the day.
But we won't get it.
Well, and I think, look, what we're seeing, and one thing that's fascinating, I was talking to someone earlier that was saying, well, these are such long-term factors. How do they get woven in to markets and to companies? What I said, like, what we've discovered is there are more diverse and faster transmission mechanisms that take these things that are supposedly remote and long-term and make them much shorter term and real. So carbon pricing, right? Think about folks like Walmart and Amazon, very large, structurally important players that have very ambitious targets that reach up and down their supply chain, touching almost every nook and cranny. And so the reality is, companies may think, oh, there's not going to be a legislative price on carbon. But if you're in the supply chain of somebody that has that, if you're in the portfolio of an investor that has that, congratulations, there's a de facto price on carbon.
But every big bank, every big financial service, every big investor is afraid of greenwashing, of mislabeling something, of promising something that is just not there. How do you avoid that? So
at the end of the day, I like to say, it's about a thesis, not a label. Right? If you're solving for a label, I think sometimes that can create those sorts of issues. What do you mean? Is solving for it really getting the right thing? At the end of the day, it's, I think, just going a level deeper. And once again, this is back to, is this a separate side affair? Is this a separate set of products, separate set of tools, or is this integrating this into people's day jobs? Right? And I think if it's integrated into the day job, you'll have a core thesis about how this plays out in your portfolio, in companies, whether you're an asset manager, an asset owner, a corporate. And that has real legs, because if that's your conviction about what's going to drive your success as you grow the business and manage it, if you're not solving for appearances, it's going to resonate. And it's interesting, our research colleagues have run through some data which are really interesting. They basically show that companies that actually perform better on these factors, particularly use of human capital, use of physical capital, they have higher returns on capital. Companies that simply disclose more have lower, right? At the end of the day, back to this kind of more fire, less
It's
smoke.
the way you do it.
Yeah, exactly. Like if you focus on the things that matter and you execute well, and at the end of the day, that probably sounds a lot like what executives and investors should do. Find the things that matter, get really good at them, and execute.
I know you've charted, I guess, investor appetite or the appetite of chief executives to change. What did the last 12 months show you? Because we're dealing with cost of living crisis, we're dealing with inflation and an economic downturn.
Hey, look, I think the good news in some ways, I think this burns the fluff away, right? This is when all of this gets very real, right? And it reminds people charts don't all go up into the right, markets are hard, and macro matters. Right? And I think, we had a few years when people may have lost sight of that. And, there was some panacea thinking that unfolded, right? This is easy, right? Investing is never easy, or at least never for very long. Running a business is never easy and never for very long. And so there's a little bit of a reality check. Now, this is a harsh reality check, and in some cases with really dire human consequences as we think about what's happening globally. But I think in some ways, I think it'll hopefully burn away some of that noise, and people have to focus on, think about what's happening with energy prices in Europe. Being efficient in your operations, that matters a whole lot.
We're also burning coal.
Yeah. No, but I mean, once again, this is what I told someone is, companies, when they think about decarbonization, who's happiest are the people that did it 5 years ago, right? The next best time is now, and what this is doing in terms of driving efficiency. The second thing also, supply chain, right? Resilience of supply chain, great relationships up and down that. In times of stress, whether that was COVID, whether that's now, what's happening geopolitically, I think that starts to pay off in a very real world way. It doesn't become an abstract ask of someone else. It becomes an operational organizational imperative. And I think that's what this environment does. It focuses you on what matters. And I think if you can get rid of the labels and the jargon, a lot of this stuff matters, right? And it's not political, it's not ideological, it's not philosophical, it's actually very practical.
So is that how you pitch? You speak to a lot of chief executives or founders. What do they ask you the most? Is there one common question that you get asked at every single meeting?
There are a couple, and they've unfolded a lot. So I think, one is, one of the ones that makes me very happy now is large investors, sovereign wealth funds, pension funds. They say, okay, well, we all know these are real, powerful investment themes, but now it's competitive. Right? There's a lot of capital competing in this space, so how do I make money? So it's that next level. I was sort of sitting down with one client, I had to go through, what are the 4 levers of how you actually make money in a backdrop where these themes are actually increasingly well understood, appreciated, and competitive? So, that's a question I love.
And the answer?
Well, so I'll give you the very short version. We can do the longer version in the hallway later. So 4 things I said. Number 1, we have noticed, and this goes back to Imprint Capital in 2007, these thematics go through cycles. And to be simple, but this is how we describe it: too early, too late, and just right. Right? Early on, things are nascent, unproven, often a high failure rate and capital intensive. That's not a great place, particularly for private capital. Eventually, they graduate, they mainstream, they scale, they get access to the bond market. And so, think about utility scale renewables, like very low cost of capital, amply funded. Things have gone through that cycle. So once upon a time, wind and solar went through that. Offshore wind, distributed solar. Now we're looking at battery storage, right? These cycles are very, very similar. And so one way to make money is find things at that Goldilocks spot, right? When you can see something that's graduated from nascency, but the rest of the market either hasn't realized it or hasn't figured out how to access it. Because if you can do that, 2 things are going to happen. 1, you're going to originate assets that people are going to pay you a lot for down the line once they appreciate them. And 2, you're going to create a platform with equity value. That's number 1. Number 2, back to internet days, picks and shovels, right? The $150 trillion that are going to go towards this space, that corporate spend on decarbonization goes into lots of nooks and crannies of the economy. So if you can find those second-order effects, a CEO told me, of a pension fund told me, it's a lot easier to pick that there will be a winner than who the winner is. And so picks and shovels, right? No, so picks and shovels lets you do that. People will just benefit from volume regardless of who it goes to. Number 3, make your own luck. Right? A lot of the best deals are made and not found. And so we're seeing a lot of interest in, for example, carving out sustainability businesses from large public companies. So if you do the work, it's like what we did with Northvolt, right? To create a great European battery champion, you need a lot of money. How do you finance something that's not going to have cash flow for a while? Offtake. So we got $15 billion of advanced purchase orders. So that deal was really made and not found. Then finally, 4, the green leaders of today are not cheap from a valuation perspective. The green leaders of tomorrow might be.
But where
right?
do you find them? So smaller companies or just other regions in the world which we don't necessarily think about?
Or they could be large incumbents in industries that have a lot of work to do, right?
Yeah.
I mean, we bought the Danish oil and natural gas company and helped it become Ørsted, right? That was probably a very impactful investment, but also, it's one that financially did well. And so that premium, that gap in terms of valuation, there's a lot of impact to be had and a lot of money to be made there. So those are the four.
What sector are you most excited about now in
gosh.
terms of transformation or disruption?
All of them. No, honestly, I mean, because we see these are ecosystems, right? And so at the end of the day, as you think about vehicle electrification, well, that's drivetrains, it's batteries, it's actually the actual facilities, it's battery recycling, right? And then, okay, we got to work on charging networks, and then we got to work on distributed power, and that means also solar plus storage. And so each piece, then we got to work on critical mineral sourcing, right? And so each driver cascades to other sort of sub-markets. And I think, as you think about systems, kind of tomorrow's bottleneck is the day after tomorrow's opportunity.
But if you have big companies that are either, big polluters that give either big dividends or just have massive returns, how difficult is it to lure investors away from those?
Well,
or is it about the transition?
I mean, I think a lot of those companies see a great chance where when they do have a lot of cash flow and there is transition in their future, they can self-finance it, which I think is actually a great opportunity for they, either on their own or in partnership with other investors.
Optimistic about COP27?
Optimistic. So, look, so far, I think there is a lot of will. I think what's been nice is, a lot of people have shown up with transactions that they've executed, not just aspirations. I think that's honestly the thing that I get most excited about when people show up not saying we commit or we want or we hope, but we did, right? I like a lot of past tense verbs as opposed to just future tense verbs. And so I'm seeing a lot of that, which is good. But I mean, there's a lot of work to be done. And I think that's what's so exciting, being here with everybody and getting the ecosystem in a microcosm together to roll up the sleeves.
John, thank you so much for your time today.
Thank you.
Please welcome to the stage Tracey McDermott, Group Head of Conduct, Financial Crime and Compliance at Standard Chartered Bank, Daniel Mickelson, Senior Partner at McKinsey & Company, and Derek Rozycki, Head of Responsible Investing at Mubadala, for a conversation with Bloomberg Intelligence's Adeline Diab.
Hello, everyone. It's a good topic today to finish the day, how to break down the next barrier to responsible investing. And I'll start today talking about maybe first question for you, Daniel, on the commenting on the US midterm election. We've seen that we're not anticipating a big red wave, but Republicans have advanced, and given the US has a big role to play for the green transition. What are your thoughts?
Well, my thoughts are I'm going to try and stay away from the politics of it, but I think my view on it is I'm not sure how much the midterms are going to change. But obviously, the stance that the US takes in the medium to long term does make a big difference. We've seen with the introduction of the Inflation Reduction Act now and all of the environmental measures that are contained in that the US has a really big role potentially to play in this space. And it's just a function of the fact that it's the world's largest economy, it has massive innovative power, it has great industries, etc. And what we need in the green transition is to develop a bunch of technologies that need to be developed quite quickly, and we need to scale them quickly. And I think the US is definitely one of the countries that's best placed to sort of play in that space. So that would be my view on it.
And Tracey, would you like to comment on that?
Yeah, so I think I'll also stay away from the politics, but I would just say that I think if you look at what's happening in the US across corporate America, I think there is a real appetite to focus on delivering to deal with the climate crisis, delivering the innovation and technology that's happened there. And it's tricky in the industry because you're often caught between civil society on the one hand and politicians on the other hand, wanting different things. But I do see that there's a real momentum, and we saw a number of years ago when Trump pulled the US out of the Paris Agreement, actually that really galvanized industry action and corporates taking action. So I think the wave has started, and I think, whatever happens in terms of the elections, that will continue, and there'll continue to be a focus on actually delivering what we need to deliver.
That's very good news. And Derek, may I turn to you? So next year, COP28 will be in Abu Dhabi, Dubai and Abu Dhabi. And as the head of responsible investment of a sovereign wealth funds in an OPEC country, how is responsible investment taken? Is it taken seriously? Is it top of the agenda? Could you share some thoughts with us?
Yes, absolutely. Mubadala has been a company that has always been integrating ESG principles and considerations. We were established as a development company with a mandate to drive economic diversification, invest in social infrastructure. We used to talk about the double bottom line, in fact, in the early days of the company. And as we evolved and grew across global investment, we continued to keep that DNA in our organization. So it's always been part of how we do things in Mubadala. With the establishment of the responsible investing team in 2021, what we've really recognized is that we need to drive institutionalization and consistency across how we're implementing that. We need to leverage a lot of the fantastic work that's been done over the last few years in the ESG space, and integrate that into this fundamental approach as we look to drive ESG into our investment process across the investment lifecycle, both in how we deploy capital, how we manage our assets, and how we monetize them and get them ready for monetization in the future. Because at the end of the day, there's an absolutely fundamental belief in Mubadala, and it goes all the way up to the senior-most leadership, that concentrating on ESG issues broadly, particularly areas in climate and how we engage with our communities where we work and our employees, are fundamental to driving strong economic returns. That's been proven through our model throughout the years, and it's something we'll continue to do regardless of what happens in the US. In fact, we believe it'll be some more opportunities there. So we're very excited, and the organization is fully behind integration of ESG.
Thank you. So moving on more to the energy conversation, the world, it looks quite different this year since last COP26. We have the Russia-Ukraine war, the inflationary environment. So how is this basically accelerating and challenging the green transition? Daniel, could you comment?
Okay, I can kick us off at least, and then I'll be interested to hear in what my colleagues have to say. I think if I start from Europe first, which is where I'm based, I think from a European perspective, 15% odd of global emissions, but from a European perspective, energy security and the green transition are kind of two sides of the same coin. They go hand in hand, and it's because large parts of Europe, with the exception of Norway and a few others, are fossil fuel importers on a big scale, right? And so we're in a sort of different situation now where the energy security considerations have become very clear, and actually that's serving to reinforce the push towards green transition, at least in the EU and the UK. And in fact, we're seeing that come through in terms of rules being changed. So it's now easier to put up solar panels in Spain and things like that. So it's having a very practical influence on not only the rules, but actually also the amount of green energy generation capacity that's being put in. We're also seeing some of that around the world. So there is definitely that effect. On the other hand, it serves to reinforce the dependency on fossil fuels for a whole range of different purposes. So I think it's sort of both sides of the coin.
Thank you. I think the geopolitical environment has been quite evolving. And one of the key barriers is definitely emerging market. And I guess I'd like to ask you, Tracey, how can we increase clean energy in emerging markets? I know Standard Chartered is doing excellent or very creative solution in helping direct capital towards various emerging markets. Could you share with us some of this experience and recommendation to mobilize more capital?
Yeah. So I think, Daniel just touched actually on the question of energy security, and I think it's really important that we remember when we talk about emerging markets that there are still hundreds of millions of people in the world who have no access to reliable energy yet of any type, green or otherwise. And so I think the issues we're trying to solve for in emerging markets, which potentially could be seen as conflicting, is that question of energy access and reliable energy access, the question of affordability, which has become more acute because of the factors you mentioned, and also then the need for a just transition. And that just transition is not just about climate, it's actually about jobs and development, so that decarbonisation doesn't stand in the way of development. So in the emerging markets, we're trying to solve for all of those, which means really looking at how do you focus on leapfrog technology where you can. So if somebody can go straight to solar, how do we think about that? It's very importantly focusing on how do you think about the transition away from fossil fuels, which is not going to be immediate. And we know that even if you look at the IEA pathways and so on, there are rises in fossil fuel usage in certain parts of the world before there are decreases. And it's also focusing on that sort of social and people side, and really thinking about as well, how can you help emerging markets monetize some of their natural resources that are actually there and are part of the planet's defense against climate issues. So things like looking at carbon capture or carbon exchange from, there's a recent project that's been done through Climate Impact X, looking at mangrove swamp restoration off the coast of Pakistan. That's something which brings money into Pakistan, it's something which helps the planet, and so on. So I think we've got to look at it through all of those lenses, and we then also have to recognise that not every emerging market is the same. There are some renewables, solar projects, clean energy projects, which are utterly bankable on commercial terms in some markets. There are others that are pretty much unbankable currently, either because of the size and scale or because of the lack of institutional framework and so on. And it's those ones where we need to look at how we work together across the public and private to bring in finance, to use the power of the MDBs, to have first risk advantage, to take that away so that the private sector can crowd in behind it. So we've got to get much more granular, I think, in the way we think about different.
And on this point, could you share a concrete example?
In terms of?
Like the blended finance example of
so a couple
investment
of blended finance
countries.
examples we've recently done. So in Vietnam and Indonesia, both actually solar power based funding solar, floating solar in Indonesia and ground-based solar panels in Vietnam. Both of those were blended finance with the ADB. We've done some work in Angola recently, which wasn't on climate, but was on clean water, working together with the World Bank in terms of providing water for the Luanda region in Angola. So lots of activity actually in the blended finance space. The real challenge is how you scale that and how you make it, many times bigger than it currently is.
So Derek, could I turn to you to scale
Yes.
as an asset owner, working with other asset owners? Could you share with us some recommendations about how to mobilize further capital to increase clean energy in emerging markets?
Sure. So I think it's really two steps, twofold. Number one, Mubadala has been deeply committed to this, particularly through Masdar, our renewable energies company, since its inception in 2006. And there have been numerous times where Masdar has stepped forward, worked collaboratively with governments to set up the necessary contractual structures and do first-time deals that establish the template within that market for new renewables deployment. And I think in many ways, drawing from Abu Dhabi's own experience, having moved from establishing the IWPP market in the early 2000s all the way through now having a number of the world's most low-cost solar power plants and largest solar power plants. And so through individual action, also through action from entities such as the One Planet Sovereign Wealth Fund initiative. We were lucky enough to host the CEO membership from 47 different entities, including sovereign wealth funds, as well as asset managers and private equity in Abu Dhabi in October. And that really culminated in, was the culmination of a year of hard work and collaboration together, looking at how we can work together for ecosystem-oriented approaches that are equity-led, not necessarily DFI-led, which I think is where a lot of the efforts we've heard about over the last couple of days have been oriented. I think that the solution really needs to lie with the asset owners at the end of the day, be they sovereign wealth funds who are very interested and have a long history of deploying capital into the emerging markets, or other entities. And so working in partnership to find solutions, and of course in collaboration with other parts of the capital structure, whether the DFIs, the multilaterals, and grants. And I think we need to do that in an iteration of approaches that we've used historically, but at an institutional scale. And I think that's the benefit of working in collaboration with an entity like the One Planet Sovereign Wealth Fund Initiative, where we really draw together all of the resources, putting aside a lot of the politics that many organizations are getting caught up in, and are focused on finding tactical solutions, real-life implementation, for example, on data in private markets, which we'll talk a little bit more about later. So I think it really has to be led by individual companies and on an institution-wide ecosystem level, working in partnership across the equity side of the spectrum.
Thank you. Daniel, would you like to comment on this?
Yeah, sure. I can chip in a little bit as well. So I agree with what Tracey said and also what Derek said. And I think there's a lot of discussion about blended finance. There's a lot of discussion about getting the whole capital structure at play. I guess one thing I would add, and that's an area where we as McKinsey have played a role, is actually constructing the deals and getting the investment pipeline going in the first place, because that's right at the front end of the funnel, if you see what I mean, right? So there needs to be something for the MDBs and the development finance organizations and the ECAs and the commercial banks and the venture capital people and sovereign wealth funds and so on to invest in. And what I find some of the time is that in places like Africa, for example, part of the problem is that there are actually quite a lot of projects that could be done, but they're not being created in the first place, if you see what I mean. And I think a lot of the financial institutions are not necessarily that well placed to drive that development of those commercial ideas in the first place. That has to come, as you were saying as well, right, from companies and from other players, mission-driven players as well. So I think to some extent the frustration or the challenge from a financial or from a financial institution perspective is that they're a little bit further back along that funnel, if you see what I mean.
So thank you, and and that was a very, I think, important topic to cover: energy from different angles and different regions as an next barrier. And moving on more maybe to regulation, greenwashing, litigation. Daniel, maybe staying with you, do you think greenwashing risk and litigation risk, which is on the rise, do you see it with your clients? Is this dampening, or is there a risk or a fear of this is dampening investment appetite in responsible investment?
I don't have any hard data on it, and it's probably too early to sort of establish that, although I'm happy to be proved wrong. If somebody has a nice data set that shows this, I'd be very happy to see it. Anecdotally, though, I do worry about it a bit, and I do see some examples of the concerns about greenwashing leading to a reduced appetite, basically, to invest. It's anecdotal, and it's examples that I probably can't really share in a public forum. I should say on the flip side, of course, there's a good reason why there's so much focus on greenwashing, right? Fundamentally, what is sought to be achieved is that there aren't investments that are being carried out that seek to pass off the delivery of some benefits rather that then aren't there, if you see what I mean. But yeah, I do worry about the other side of the equation.
So maybe we can turn to Tracey, who is, as a former regulator, can guide us. I mean, we're seeing greenwashing is real, and regulators have stepped in very rightfully. And but there are maybe different aspects we need to talk about as barriers. First, maybe there is an angle about, again, emerging market application of regulation drafted with a Western lens. And the second one being, we're seeing many taxonomies emerging all over the world. There is, I believe, more than 35 different green taxonomies, and how an investor can manage or have the interoperability of those taxonomies. So maybe two questions in one for Tracey.
So I think, as Daniel said, there's no surprise that regulators are focused on this. It's a growth emerging area, and there is a strong desire, actually, including from the industry, to have a level playing field, which leads to a focus on how do you regulate, how do you mandate disclosure, and so on. I think one of the big challenges in this space, we all know that the availability of data is inconsistent across the globe and between industries, and there is a risk that the rules get written for developed markets, for listed companies on developed markets, and actually that's not where the fundamental flow of capital needs to get to. So I think it's really important that as regulators think about how they're going to regulate this, that you look at this through a lens of what's going to be something which will be credible, but will also be flexible enough to allow for the fact that you may have different data points or data sources or ways of measuring something in Indonesia than you might do in the UK, for instance. That does go on a little bit to interoperability, because I think part of the reason why you are seeing these multiple taxonomies develop is partly because everybody frankly feels they should be doing something, and there's a sort of pressure to do something. And, you know, if we think about the global financial crisis, where there was a lot of consensus about what needs to be done, it still took, 15 years to actually implement the regulatory changes in full that were flowing from that, and we haven't got 15 years here, so we've got to get on with it. I don't think there's any realistic way we are going to get one global taxonomy. So I think the key focus, and certainly one of the things we've been arguing for at Standard Chartered, where we are subject to many of those 35 different taxonomies, is to focus on this question of interoperability. So it doesn't all have to be the same, but can Singapore recognise the UK? Can the UK recognise what's happening in Hong Kong? And so on and so forth, so that you actually can get yourself at least 90% of the way there to compliance, by actually looking at those other areas, because otherwise you are inundating clients and with requests for information and creating extraordinary complexity, which is operationally really hard to manage.
And has to be done anyway.
Can I have a quick follow-on
Yes,
comment, also an
absolutely.
extension? I think also there's a challenge in a lot of the greenwashing claims that are going on right now. Absolutely, there's sort of two buckets. There's misrepresentation, and people who are doing that absolutely must be held to account. And there is often a call of greenwashing for entities that are coming out with goals or objectives that are perceived to lack ambition, or not to go far enough, or not stretch far enough. And I think that it's important that we, given where we are today and some of what we've heard in this COP convention, we need to be celebrating the wins, even if they're not quite as far as we would like them to be. And we need to be working together in collaboration and partnership, and putting energy towards finding solutions, how to find that path forward, how to find that further ambition, perhaps less than putting so much energy into holding people who are trying to make progress to the best of their ability in their current circumstances back. And I think we're seeing, one of the ironic outcomes of that is that, you may have seen an article referencing green hushing in the Financial Times recently, where it tries to describe companies still making progress but not being willing to talk about it, so effectively decreasing transparency across the space. And that's a very unfortunate outcome of what's going on in the space. So I think it's important that we absolutely hold entities that are misleading and misrepresenting accountable. and that we also work to celebrate entities that are moving forward in the journey, and then to help them move further and find ways collaboratively to do that.
The greenwashing point is excellent, absolutely. And I guess, just conscious of time, we can't finish a panel on the barriers to responsible investment without talking about data, the data challenge. So maybe I'll turn to you, Daniel, for this one. So everybody, and we heard it a lot during this COP and many, many other conferences, that there is a massive data challenge. So as a previous HSBC banker, today at McKinsey with many of your clients, so do you see improvement? I guess we can all agree there is improvement, but what kind of improvement? But do you also see data as a source of perhaps competitive advantage?
Yes, potentially. So yes, everybody's heard a million times that data is an issue, and it is, having lived and breathed it for things like emissions calculations and things like that. It's a mix of getting external data at a counterparty level, which often isn't there or isn't of a sufficient quality. But I would also say sometimes, at least for big banks and others, it's actually often about getting the data internally within the organization, which is not so much to do with the industry procuring data. Then it's to do with different standards being deployed by different organizations. So everyone has their own questionnaire that they put to clients or counterparties, which is slightly different from everybody else's. And we've seen across industries, both banking and also in your world, Derek, right, sort of efforts to try and coordinate these things are challenging. But I think, on the flip side, the data situation will improve. There are incentives that are sort of built into, for example, emissions calculations with the PCAF scores to try and improve those numbers over time. I do also think that they will provide competitive advantage. For example, if analyzing specific companies, you have asset level data, you can use that to really understand the profile of that company if it's really subject to various physical risks or transition risks, those sorts of things. So I'm optimistic it'll develop over time, but I've also found that there's a coordination challenge around a lot of these things where almost the ideal outcome would be for the industry to collaborate more around things like creating common questionnaires, but it doesn't quite happen to the extent that perhaps people might like.
Yeah, absolutely. Standardization is key. And I guess physical risk, as you mentioned, private markets, and I'll definitely turn to Derek in a second, and emerging markets are definitely where, although there remain big challenges across sectors and standardization in most regions, these are three big gaps we need to fill in terms of physical risk, asset level data, which is critical. And if, I don't know if Tracey, you have any comments on physical risk data specifically, or emerging market data, that would be very interesting.
Yeah, actually, interestingly, physical risk data has been some of the stuff that's been easiest for us to get hold of, because the insurers have been thinking about physical risk, not through a net zero lens, but through an insurable risk lens for some time. So actually, you can get a surprisingly good amount of physical data at an asset level, albeit it's based on a set of scenario assumptions, which obviously may or may not happen. It's actually the data around emissions levels that's much harder to get to. I think the only thing I would add to what Dominic said is there are moves afoot to, through G funds and, well, actually, it's Bloomberg, the net zero data utility, I can't remember what its technical title is, but the idea of that is to create a free source of data, which, if that works, that will be an absolute game changer in terms of creating an available source of data, which means that your clients aren't being inundated with 25 requests from 25 different banks for slightly different information in a different spreadsheet and so on. So I think there is reason to be optimistic.
Yeah, structural changes. And Derek, maybe moving on to private market, which is much more challenging. 75% of private markets do not report any kind of climate data at all. And being a big investor in private market, how do you make investment decisions with climate in mind in private markets?
Well, without data, it's very hard. And so, we can engage with our GPs about the theory of asset management and how they engage with their assets. But until we start talking numbers, it's hard to bring that up to the level of really having informed discussion and integration into our investment life cycle. So what we've decided to do is work very closely with the One Planet Sovereign Wealth Fund group, where we have a very aligned group of organizations who are all dedicated and interested in integrating climate into their investment processes in a much more comprehensive manner than we can do today. And actually, we've been able to make some significant progress on that over the last year, coming together to using existing frameworks. This isn't more alphabet soup, but using existing frameworks and really focused on trying to move that 75% of the market that provides absolutely no information today into the next iterative step forward, which is calculating estimated carbon footprints for their portfolio companies. And as a group, we came together with a strong encouragement for our GPs to provide us with that information for their portfolio companies in 2023. And so as we start to talk about practical implementation, the boring plumbing of actually affecting change to the beat of a drum every month, every year going forward, it's these kinds of things that need to happen. It needs to be equity-led initiatives in combination with our banking partners, our private equity partners, our consulting partners, of course, and asset management side, to really come out and give clear messaging on converging and trying to clear away the clouds of all of these different methodologies and to provide clear and concise a path forward. And at least, as we talk to some of these less developed GPs, the first step in climbing the mountain, because a lot of them don't know where to start. It's just too complex out there today. And part of that process is you've got, to your point, Daniel, too many people asking for too many different things. Actually, I think that was Tracey's point, but too many entities asking for too many different versions and too many flavors of the same ice cream. And so we need to work together to provide clear guidance on that. And OpSwift has been a fantastic method through which we've done that and succeeded to do that in the last year, and we look forward to doing it in the future.
So with that great call for action and collaboration, I hope you enjoyed our panel about the next barriers that we need to work on and break down. Thank you very much, everybody, for attending this session, and have a great COP.
We did run out.
Just before everyone heads out, thank you to our amazing panelists. That was a really fascinating session. And I would like to give a special thanks to our presenting sponsor, Mubadala, for making this session happen. Really great insights. And if you are following the data, as we discussed in that panel session, and would like to hear more about Bloomberg Media's future of sustainability investing study, which is sponsored by Mubadala, you can scan this QR code. We'll leave it up here for a little bit if you want to take a look at it. So some really great insights in that. So I encourage you to check it out. And in about 20 minutes, we've got even more fun stuff over here at Bloomberg Green. We are not done yet. We'll be having a special screening of the documentary Feeding Tomorrow by filmmaker Oliver English, who is here with us, and will be doing a live Q&A. So grab some refreshments, and we hope to see you all back here for that screening at 6:30 p.m. Thank you, Mubadala, and thank all of you for being such a great audience.